Okay, we need to talk ASAP as soon as possible because tomorrow's economic data could really shape the rest of this year, throughout the rest of December, and the beginning of January. How our markets trade. Do we continue higher? Do we fall? Do we trade sideways from here? We have big data coming out tomorrow morning, not the soft stuff, the big data, hard data, as they call it. We're going to get into a couple other things as well. We do have some encouraging news from the car dealership guy that used prices could be about to fall big time for used vehicles. Yeah, that's going to be good news for inflation if that is true. We also have some individuals forecasting Tesla stock could reach $400 or more by the first half of 2024. We also see Tesla is now advertising the most they ever have, running about 400 different ads on Google. What does this mean? Well, I think you need to put it into a little bit of context. Used inventory numbers in my area are very pitiful, like stupid low. There's almost none for the Model 3. And I think that's also a good sign for Tesla's demand. We're going to go ahead and get into all of this information. Hit that like button and subscribe to the channel if you guys find value out of this video, but don't do it now. Do it at the end if you find value out of the video, of course. But if you guys want to come trade with us live in real time, link down below in the description of this video. Let's go ahead and jump into it. So let's start with the economic data, because I think to even discuss a potential breakout in Tesla from here, you need to see the data play in our favor. If the data does not play in our favor with stocks trading at all-time highs, it's not going to be pretty for stocks. That's the simple fact. Because we get some hard data, not the soft stuff. Core PCE price index month over month for November. We're expecting 0.2%. If you just take whatever number, times it by 12, you get the annualized 12-month average or run rate. This would be about 2.4% if we had 0.2% over the next 12 months. That's okay. It's still higher than 2%, but it's not too high. For an example, if you come out at 0.3%, that's 3.6% annualized. Unless there is one off, data point, like used car prices just spike, or something that's kind of a one-time deal that causes a spike, let's say, for an example, the markets might look through that. But if you start to see a kind of broad increase in PCE, everything kind of went up a little bit more, that's not going to be great. My expectation is 0.2%. I think that's pretty accurate. I think there's a greater chance we come in at 0.1% than 0.3%. But if I were to bet, and I am a gambling man sometimes, I would say 0.2%. But 0.1% would not come to me as a shocker. Okay, so that would be great news. But even 0.2% is okay. Nothing to be concerned with. Durable goods orders month over month is expected at 2.2%. Last month, you were at negative 5.4%. So just so everyone's on the same page, right now, inflation is falling, economy is doing okay, it's holding up, and the Fed is now talking about rate cuts. That's perfect. That's Goldilocks. That's the soft landing. We have a problem if one of two things happens, or both. Either inflation starts to go higher, the economy holds up, that's all fine, but if inflation goes higher, that's a problem. Fed's not going to give us as many rate cuts, odds of a recession increase, blah, blah, blah. You understand why inflation going higher could be negative for stocks. Number two, the economy getting worse. Yes, that would mean more rate cuts, but yes, that would mean we might be heading into a recession. Markets would not like that. A recession is the market's enemy. Its ultimate enemy is a recession. So that's the last thing we want to see, or at least get signs that we're heading towards. Now, for durable goods orders, I'm expecting you could actually see a 3+% number here, and that would be great news. If you come in negative again, like we did last month, let's say negative 3%, negative 5%, that's not going to be seen as a good thing for the markets at all. But I don't think it's actually the most important thing. You have personal income that's expected at 0.4%. Last month was 0.2%. I think personal income coming in high might actually be a good thing. And I think the 0.4% estimate is pretty accurate. Maybe 0.3% is where we come in. Maybe a little bit on the lower side is where I'm feeling on this one. But, I mean, those would still be good numbers. We want real wages to be positive. And that's what we have just started to see. So far, so good there. Personal spending is the big wild card in my personal opinion, because personal spending in the economy is about 70% of GDP. So if personal spending comes in as we expect at 0.3%, that would be an improvement from last month's number of 0.2%. That would be great news. Why personal spending is a wild card? Because personal spending can come in way lower or way higher than expectations that the markets have a lot of the time. So personal spending, I actually think could come in at 0.5% based on kind of what I'm seeing, some numbers out there, some data that we can look at. 0.5% would be fantastic news. It would show people are spending money in the economy, that we're probably not heading into this foreshadowed recession, and things are doing fine. Now, if we come in at 0.2 or lower, God forbid we're negative, that's going to be very bad news for stocks, because that's going to be bad for GDP. Because let's be honest, last month in October, you had negative 5.4% durable goods. Personal spending was so-so, right? Personal income, so-so. So you kind of need to see a strong November for your Q4 data report, because December, a lot of people are expecting December could be a weak month for GDP. So if November is not the strongest month, your Atlanta Fed GDP Now tracker is probably going to start reflecting some not so great things. We have seen a rise in the estimates for GDP from the Atlanta Fed GDP Now tracker. Currently, we're expecting 2.7% GDP for Q4. Blue chip consensus has actually been falling. Now blue chip consensus is at 1%. And the lower end analysts, with some of the lower estimates, they're also lowering their estimates even more, now to about half of 1%. So it's pretty important this data tomorrow comes in good for the economy and progress on inflation continuing to fall. That's my expectation based on the estimates I have went over in this video. If that happens, this will likely fuel a continued end of the year rally for stocks, especially because we've reset a lot of your indicators that were suggesting markets were overbought. According to Bloomberg, vilified zero-day options are being blamed for yesterday's flash crash-like event. They say we have been very wary of zero-day options for quite some time. Today we saw a late-day sell-off that we believe could have been caused by, or certainly exacerbated by, zero-day XPX options. Certainly the market environment was ripe for it. That's because stocks have just been rallying so aggressively to the upside with basically zero red days. It's been quite aggressive of an upside move recently. So we're in a better place now that happened yesterday. Now, this is an encouraging sign for inflation as well. Car dealership guy says, big scoop, we're about to witness an unprecedented 1-month drop in used car values from reputable sources as always. This text says, Nata Books dropping 6.5% in January, highest I've ever seen, over 1.8 million in value for our inventory. So used car prices still a sticky spot, still a hot spot in your CPI reports, that and housing. But if car prices really do fall in the next, month or two, that's going to be some great progress in inflation. I don't know if that's going to be represented in the PCE data tomorrow, but it's possible. Now to the main story of this video. This individual, Mortison Batch on X, has about 16,000 followers. He says Tesla, this is This one is on a mission to break out of a multi-year IHS pattern, inverse head and shoulders pattern. The fact that we've been in this pattern for so long will only make the breakout even more aggressive. We broke out of the right shoulder bull flag. Now we just need the neckline break, and then it's off to the races. Weekly bullish MACD cross is confirmed. $400 first half of 2024. Now, if you guys are unfamiliar what a head and shoulders pattern is or what an inverse head and shoulders pattern is, an inverse head and shoulder pattern is described on Google as a chart pattern that formally is commonly used in technical analysis to predict the reversal of a downtrend. It is a bullish signal that is essentially the reverse of the regular head and shoulders chart pattern, which is a bearish indicator. This is somewhat what it looks like. Kind of a peak here and overall resistance at the neckline. First peak, a fall, you hit a low, right? You come up, you hit another peak, kind of trade sideways, create another shoulder, and then you get a breakout above the neckline, which can then send a stock soaring. And that's precisely what it looks like is happening with Tesla. Now, when I look at this chart personally, it seems like the actual neckline somewhere around here in the 290 level, although you could make an argument for the 270 level as well. Either way, if Tesla does what I expect Tesla will do and break out further from here into the 260s, 270s, and ultimately maybe even 300 as early as January, that will set you up for a much larger rally. And I think this could be a rally of shorts covering. I think this could be a rally of a lot of people that have just been negative on Tesla for a long time, that have been unjustifiably negative on Tesla, coming to the realization that things are getting better for Tesla from here in 2024. They're not getting worse. It's going to have to be a really bad macro environment, super bad global economy for 2024 to be worse than 2023. 2023 and even the second half of 2022, you were basically in a recession. The consumer was in a consumer-driven recession. A lot of that was gas prices. A lot of that was just overall inflation. Inflation. Housing inflation is a notable cause. Now things should be starting to get maybe a little bit better. Even you can say the price of gas falling should be good for consumers as well. So there's a lot of different arguments you can make on that front to say 2024 should be better than 2023. And I think that starts here soon as markets are forward looking. Tesla will give us their Q4 delivery numbers, which will come out in early January. And that's going to be your next biggest catalyst besides FSD entering the Chinese market. Those two catalysts, I think, will be enough to send you to $300 or above that. We know FSD is entering into the Chinese market likely some point this month or next month. Now that it is December 21st, you could maybe make the argument it might be in January since we have not gotten news of this yet, but it's still possible. Any day now it could be announced that FSD is entering the Chinese market, and considering the margins on FSD, that's going to boost Tesla's bottom line by my estimates as much as $1 billion in the coming year. And that's sizable. That's an impact. That's going to help margins quite a bit. These are just two reasons in the very near term, like the next 2 or 3 weeks, that Tesla stock could, in my opinion, rally into the 300s. But to see Tesla at new all-time highs by the first half of 2024 really doesn't sound all too crazy to me. Okay, so the next thing I want to talk about as well could have implications for Tesla demand right now. If you take a look at 200 miles just around me, this is not exactly my zip code, but just 200 miles around my general location in Michigan. I'm pretty far from Giga Texas. I'm pretty far from Fremont, right? Now, this is looking at Model 3, the entire inventory lineup. There is 1, 2, 3, 4, 5 vehicles in new inventory kind of around me, right? Okay. Look at rear wheel drive. There is one vehicle around me. Last night, there were 3. So this is literally the last one left. That's just overnight. That's just around me. I could only imagine what the order log is looking like for Tesla right now. It must be ridiculous. I've never seen inventory this low for Tesla. And it looks like, Tesla is cranking out vehicles at their factories. This is not a low inventory, situation because Tesla is not producing vehicles. It looks like Tesla's producing a lot of vehicles right now. Looks like Fremont and Texas are basically at full capacity for how their factories are built out currently. It just seems like there's a lot of good demand for Tesla right now. And that's pretty dang encouraging. If I say so myself, it's kind of hard to know what US numbers look like because we just don't get data for the US. We don't get insurance registration data. We don't get data really at all for the US. So it's almost impossible to know. This is the best kind of indicator we have to how numbers might look for Tesla for Q4. And I think the US might be a standout based on these just inventory numbers that we're seeing. There's only 5 vehicles in inventory. I've never seen this before. Usually there's 10 to 15 to 20, 25 vehicles in inventory in this general area that I'm in. 1 vehicle in inventory for the rear wheel drive, you are almost sold out. This is a demo vehicle. A demo vehicle. That is the only vehicle in inventory around me for the Model 3 rear wheel drive. A damn demo vehicle. Okay. Kind of crazy. Now, Tesla has also started to advertise quite a bit more, running about 100 more ads on Google than they previously did. This, I think, is a good sign as well. This means the odds that Tesla actually cuts prices in the future probably much lower. Now, Tesla is really advertising autopilot and leases. That's what I'm noticing right now. They do have a new SUV ad as well, 5-star safety ratings, really trying to appeal to a wide demographic of different individuals. Now, I think where Tesla really needs to advertise is on the television. That's a topic for maybe another video. But you are seeing more ads being ran by Tesla right now. This one, SUV starting at $32,990, 5-star safety ratings. Model Y starting at $36,490. Autopilot comes standard. This one says Model Y starts at $59,992, the best-selling EV in Canada. So it looks like they're even advertising more to Canada, which is just across the pond to me. The best-selling EV in Canada, Model Y starts. Again, another ad there. So definitely good to see. You see a YouTube ad right here for Tesla Energy as well. I don't know if that's maybe the best place to be advertising, but still, this is a good sign. See, the problem is with Tesla, it's not they have a demand problem, it's they have a education problem. Unless you are a Tesla enthusiast like myself and yourself, the average folk in the US, I can vouch for, or at least in my area, does not know much about a Tesla. The average person has not driven in a Tesla before, just driven in one, let alone drive one. So that's the biggest hurdle that it looks like Tesla is facing right now. Tesla's option activity today looks very strong as well. You have seen 751 orders totaling $1.31 billion with a positive order value of 56%. So again, when you are seeing more positive orders than negative orders in a stock like a Tesla, where options are the main tool tool to really hedge a position, that's a great sign. $1.31 billion is quite a bit as well. So I would say there's some pretty bullish individuals on Tesla stock today. Considering Tesla was up 3%, that's great. We really want to break above about 260. If we enter into the 260 range, if we can get above 258, that's been the major resistance as of the last, couple of days or so, and get into the 260 range, you open up the door for a lot more upside. That's where a lot of traders will likely come in if you get above 258. It's been kind of well documented, if you will. There's a lot of resistance around 258. So I think that will be important. Now, the RSI in Tesla is 60.02. So you've reset even from yesterday when the RSI was about 66. So Tesla looks a lot more attractive today than it did even yesterday on a relative strength basis. So I think that is also pretty encouraging. Overall, I am expecting a lot of money to come back into our markets, so I am very bullish as of right now, especially on Tesla, on interest rate sensitive names, on small and mid cap stocks. As long as the data goes good tomorrow, I think we could be in for quite a rally. I think the Russell could probably rally 3+% tomorrow if PCE and personal spending come in as I expect they will. But obviously, I'm not a financial advisor. I'm not a financial planner. I'm not a fortune teller. We do tend to be right more than we are wrong, but there is also the chance that, things do go sideways and, stocks do come crashing down tomorrow as well. I will point out that for a majority of the day today, the VIX was up 3 to 5%. And now the VIX at the end of the day actually closed down about 1%. If I can get this chart to load, we can look at it. Now, the VIX is at very low levels to begin with, but this was kind of the day today, right? The VIX really was spiking following yesterday. It spiked throughout the day and then just started to really come down into an important data print like tomorrow. That's usually a good sign rather than not. If things were not looking so great, you would probably see more hedging taking place in the S&P 500. So there is that, guys. Let me know what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. If you guys want to come trade with us as well, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.